Meantime, another round of trade talks between the U.S. and China underway in Washington, D.C. This is coming as President Trump hinted, as we discussed, that the March 1st deadline may be extended during a news conference yesterday. Take a listen to what he said.
I can't tell you exactly about timing, but the date is not a magical date. A lot of things can happen. The real question will be, will we raise the tariffs because they automatically kick into 25% as of on $200 billion worth of goods that they send. So I know that China would like not for that to happen.
All right, joining me now, former OMB director and author of Peak Trump, The Undrainable Swamp, and the Fantasy of MAGA, David Stockman. David, great to see you. You're chuckling here. Your thoughts on that soundbite?
Well, I have a news flash. We have a delusional, unhinged madman in the Oval Office, and anything is possible. He's conducting 4 wars on the American economy, and it's not going to make it great again. The trade war is a war on consumers. And if it goes from 10%, which is already costing $30 billion a year just on Chinese imports, to higher, that is only going to be that much worse. He's conducting a border war on immigrant labor. The domestic labor force is shrinking. We need immigrant labor. We shouldn't be having a silly battle over a wall in a border where there isn't a crisis. He's conducting a political war on the Fed that finally was getting enough courage up to normalize interest rates. For crying out loud, 10 years interest rates have been below the inflation rate, which means zero money market costs. It's been a boon like never before to speculators. It's done nothing for Main Street. And most importantly, he's conducting a war on the nation's solvency with a fiscal policy that is more out to lunch than anything I've seen since 1970 when I started on Capitol Hill. We are in year 10 of a recovery. We're in the last months. Nobody, outlawed recessions, and you don't raise the deficit to $1.2 trillion at the very tippy top of a business cycle and expect anything but bad results. When the recession finally comes, and it will come in the next year or 2 years, we're at month 116. The longest expansion in history is 119 months, and that was in the 1990s when there were all kinds of tailwinds coming at the economy. Today, they're all headwinds from abroad and domestically. We're going to have a recession, and the deficit is going to soar to $2 trillion a year as revenue collapses, like it always does. And we're going to go into the 2020s with a massive retirement wave from the baby boom, a deficit that is beyond belief in size, and a national debt that's out of control. It will be a nonstop crisis for the entire decade unless we do something big and quick, and I think it's too late.
All right, well, 1 to 2 years puts us really around 2020 in that re-election cycle. In some ways, it may be perfect for him.
No, I think it would be very imperfect because I doubt whether you're going to make it to November 2020. Why? Because when he came into office, it was already month 90 of this third longest expansion in history. That would be month 138. We've never been there before in history. Even when in 1990 and 2000 we had China just beginning to boom, we had Europe just entering the single currency and ready to borrow and spend like no tomorrow. We had a balance sheet on the Fed that was $500 billion, not $4.5 trillion, that could expand, not shrink. We had a budget surplus for 3 years in a row, not these massive deficits we have today. So if you put all that together, this is just hard to believe that they think this is sustainable.
All right, let me push back on your points a little bit, because on the trade front, the president would say that we may take a hit at first, but longer term, it's going to make the country stronger and it's going to make our economy more competitive with foreign nations. On the border aspect, the immigrant labor, I'm not necessarily sure what he would say. He's sort of looking at the border wall from a completely different angle, right? From national security perspective and from a drug perspective, and from the cost that the cost and the toll that it takes on the country to bring immigrants into the country and have to take care of them in many different ways. In terms of the fiscal policy and the war on solvency, I think the White House would probably say, and in combination with what the Fed is doing, that it needs to be a little bit of a slower move forward on the interest rates, and that normalization will come patient, with some patience, as the Fed itself has said. So President Trump would say, and I'm not speaking for him, but I'm trying to summarize here, President Trump would say everything he's doing is great for the economy.
Well, everything he's doing is going
And I will add that the stock market reflects it. Aside from the blip that we saw in December when the market gets jittery, when everything seems to be going lockstep in pace, the market goes higher.
Well, this isn't an honest stock market. This is a rigged market. It's totally dependent on the Fed. And if the Fed ever tries to do the right thing, like inch up interest rates, I mean, for crying out loud, the money market rate is 2.4%. The inflation rate is 2.3%. There has to be a real cost of money. There's taxes. There's inflation. There's risk. We are in a fantasy land in terms of the monetary policy of the Fed. Secondly, you had the chart up there before. You can't just dismiss a balance sheet that went from $500 billion, and it took 80 years to get there, to $4.5 trillion in a matter of a decade and a half.
It is a massive jump.
But it needs to be shrunk back to normal. They lied. In other words, the Fed lied. Back in 11 and 12, when they were starting QE, they said, oh, this was emergency, this was temporary, extraordinary. When the economy stabilizes, we're going to bring the balance sheet back. Now they're saying we can keep it at $3.5 trillion. We can keep $1 trillion of excess bank reserves in the financial system. That has nothing to do with Main Street. That has nothing to do with jobs or growth. That is because they are pathetic cowards afraid of a hissy fit on Wall Street, and they make it up as they go along. And someone needs to call a spade a spade. The Fed is what's wrecked our trade accounts, this silly pursuit.
But the Fed policy predated President Trump. The Fed policy came long before he came into office. In some ways, some people would say that he's stuck in a bad position because he had this sugared up economy to deal with now.
Yes, he called it a big, fat, ugly bubble. He was right. He was right. In November 2016, the S&P was at 2140. 800 points later, he said, it's a wonderful thing. It's a validation of what I'm doing. Everything he's doing is wrong. The trade war is wrong. The massive deficits are wrong. Beating up on the Fed when it's trying to go in the right direction is wrong. The reason that we have $500 billion of imports from China, $400 billion deficit, is because the Fed has inflated the hell out of the U.S. economy for the last 20 or 30 years. Think about it. 2% inflation year in and year out. The average fully loaded manufacturing wage is $30 in the United States an hour. It's $5 or less in China. This isn't bad trade deals. This isn't because China's cheating mainly. It's because of bad money. And what's Trump doing? He's saying the Fed should do even more of this kind of distortion rather than less.
Oh, David, we could go on and on about this, but it was great to see you. Thanks so much for stopping by. And I think many would agree with you. To be fair, I was just playing devil's advocate, but to be fair, on the other side, many would agree with you that something is potentially coming down the line, a recession. It could be sooner than most people think. So we will see. But thanks so much for dropping by. Great to see you.